CapMan held its Capital Markets Day, and together with me is the CEO, Pia Kåll, for an interview. First of all, welcome to the interview.
Thank you. Nice to be here.
Let's start with a summary of CapMan's current strategy.
Absolutely. So, like the heading for our Capital Markets Day as well, we're positioned for profitable growth. We've been through a transformation over the past 2 years, basically threefold. We've completed several structural moves. We've divested our service business. We've acquired Dasos Capital, which is now CapMan Natural Capital. With that transformation, we are today a focused real asset investment firm with a very strong balance sheet and strong solidity. It's a very attractive market, also looking forward, growth outlook looks good where we talk about real estate, infrastructure and natural capital. We've also invested into our platform, so it's a people business, so investing in our people, attracting, developing, keeping the best people, but in parallel, equally much put effort now on technology and automation investment. So basically automating away manual, repetitive steps in processes, taking new tools into use when it comes to contract management, reports, etc. And what that does is twofold. It improves employee satisfaction, which we have on a very high level, because people can now focus on what's really value adding. But then it's also creating a profitably scalable business model where our fee profit is growing clearly faster than, for example, our personnel. So it's a win-win in that sense. And then thirdly, strong focus on sustainability and fund performance, and sustainability really to drive financial value in our funds. And strong fund performance now, if we look at our funds, 90% are above the carried interest hurdle rate, sets us up for good success in future fundraisings and also increases carried interest potential. Our strategy is to reach 10 billion assets under management by 2027. And that is really coming from scaling our real asset strategies.
Let's go a bit more into detail with the 10 billion target of assets under management by 2027. Could you describe the path, how you're going to end up there?
No, absolutely. And it's actually very concrete and based on fundraisings and plans we already have there. So currently, assets under management by year end was 6.1 billion. And to get to the 10, it's really 4 components. It's our open-ended and mandate-based real estate funds. It's flagship fundraisings in real estate, infrastructure, and natural capital. And in all of these we see great potential, and those 4 components basically make up 90% of the growth that we're looking for.
Does M&A have any role in this target?
No, absolutely. So like we've done before, we are constantly looking at acquisition opportunities as well. And at the moment, also new growth opportunities could be organic or could be acquisition-based. So just a couple of weeks ago, in February this year, we signed an organic portfolio deal where our hotels fund doubled its size, added 400 million of assets under management in one transaction, making it from a mainly Finnish hotel portfolio into a Nordic, so also diversifying the fund, making fundraising going forward easier, and in one go really taking a step change. So we're looking at portfolio transactions like that, which are more organic. But acquisitions definitely play a role there as well. I think Dasos Capital is a very good example of the type of acquisitions we are looking for. So it needs to be something that's complementing our portfolio with the focus we have now. A team with an investment track, for example, that we can add into our platform the way we did with establishing Natural Capital.
Fund performance is obviously very important for asset manager. How have your funds performed over the long term, and are you satisfied with this performance?
So if I look at the total portfolio now, I would say the fund performance is very strong. And it's hard to give very solid benchmarks, but to give you a couple of different numbers. So 90% of our funds, closed-ended funds in value creation phase, are above the carried interest hurdle at the moment. If we look at the end of fund target states, 80% of the funds with the current outlook will be at or above their target returns, and reaching target returns or going above has usually been enough for you to be in the first quartile of funds in many cases. And looking another way to look at the portfolio at the moment, we have real estate, infra, natural capital. They are all above median from any benchmark you look at, and really natural capital, infra, really stellar performance.
After the sale of your service business, you have a clearly over-capitalized balance sheet. What are you going to do with these excess funds?
So with the funds we got from especially the sale of CaPS end of last year, it's really threefold, and you can divide it into three. So what we are doing is partly distributing dividends. So 14 cents per share from last year is what the board has proposed now to the annual general meeting. Roughly a third, you could say, will be used to reduce interest-bearing debt and also taking down financing costs that way. And then we're reserving roughly a third for growth opportunities, be it then organic, like this Hotels II fund Midstar acquisition, or be it then acquisition-based.
Thank you very much for the interview and best of luck with the execution.
Thank you.